Okay, this is a quick recap of round one that was just completed last night. I see in the net profit per team, we have a team here. Wow, this team made almost 60 million in net profits, and we have two teams that are over 50 million in net profits, and a number of teams between 45 and 50 million here. Most teams, I guess, are above 40 million, which is great. So there's really only one team here that only had 20 million in net profits, and I have to tell you this is a ghost team. There's no one in this team, so I can feel free to review the sim talking about this team since no one's in it. It's not going to hurt anybody's feelings. And everybody else seemed to have done pretty well. So let's move over to points per team. Okay, some teams had an amazing 1,000 points or more. Two teams had 1,000 points, and we had a couple of teams close to or over 900, which is fantastic. Very good performance. Now, if we look at the assignment for this, let's just check out the assignment for this simulation. You're trying to collect a number of overview points that, let me just see the total. I'm going to look that up real quick. So cumulative points, so as each round is run, you want to get cumulative points above 2,500 points to get the full score for this game. So you're almost halfway there for some of these teams. Now, if you have 6 rounds and you're trying to make 2,500 points, that means that you should try to do about 425 points a round as a minimum. So most teams did better than 400 points, so most teams are on track to get an A in this project. If we look at the stock price per team, we have, of course, the team with the highest amount of earnings, of profits, has the highest stock price. Because what is finance about? Maximizing shareholders' wealth. Why do people start companies? To make profits, make earnings, make a living. So profits are about maximizing shareholders' wealth, and net profits is an expression of that. So teams with the highest net profits should have the highest stock prices. So we have a range from 17 into the 15s, 14s, and at the bottom we have one team below. Now this WW is a ghost team, so it just has the default settings. So you want to always do better than the WW team, which I'm going to rename. I should rename that blank team. Okay, so the moral of the story here is if you want your stock price to be higher, make more profits. Okay, sales per team. We have one team who's top in sales. Now, just because you sell the most doesn't mean your company is the most profitable. For example, sometimes I tell students, I'll give you a choice between two companies I can give you. I can give you a company with 5 billion in sales or a company with 100 million in sales. Which would you rather have? So all the students say, oh, the company with 5 billion in sales. So I said, okay, you have the company with 5 billion in sales. This company, excuse me, I have a little congestion this morning. This company has $3 billion in losses. Now, for those of you who would have chose the $100 million company, this company has $50 million in profits. So I ask you again, do you want to change your mind? Which company would you rather have? So, of course, you want the company that has profits, not the company with $3 billion in losses. So sales are important, but you want to make sure your sales translate into profits. So while we do look at, anything over probably 200 million is good, and most teams are above 200 million, all teams are above 200 million, you want to make sure those sales translate into profits. Okay, earnings per share per team. Okay, so we have, this team is flat, which means they didn't improve their earnings per share at all. This team is the ghost team. They really didn't improve much because you start out about that price. Every other team did improve their earnings per share. And we have up here at the top, we have earnings per share at the top is $5.86. So this just looks at your earnings for the company. So it takes the net profits divided by outstanding shares. So if you issue too many extra shares of stock by raising capital using stock equity, this could lower your earnings per share. So make sure you don't raise too much money using stock because you want to make sure you can get a high earnings per share. It's one of the gradable categories, and this is how the this is the market share per sales and per vehicles. All right, so that's the overview of the class. So by and large, most students did very well. Let's look at if we look at this is going to bring this over here. This is the leaderboard, and we see that the current round points we have, like I said, a number of teams did better than the 400 base. Like, 400 points is sort of like the minimum you want to earn to keep on track with getting the full points for this course, this project. Now the profit margin, gross profit margin started at 40%. So if you kept your profit margins at 40%, you didn't really listen to the instructions where I had said, I sent out an email yesterday, here it is, how to score big in the simulation, and I said design cars that profit margins above 40%, try to increase them by 2 to 5 points every round. Okay, you obviously ignored that email because these teams did not really increase their profit margins. These teams, however, have increased their profit margins, some of them by more than 10, 12, even 17%. So that's very good because you want to increase your profit margins. That's maximizing your shareholders' wealth. Stock prices, we went over that before on the slide. Return on equity looks at your profits in relationship to the equity in your company. And you'll learn more about this in Chapter 3. Total points is, this is the cumulative. This is the total points is cumulative since we only have one round. This round's points equal the total points. But when we get into round 2, you'll see this is cumulative. It'll start adding up. And this is what your grade is based upon. Now, the operating profit margins measure how effectively you are at managing your advertising costs. You over-advertise, that will deteriorate your operating profit margins. And you have your earnings per share, which we discussed in the graph. And so it's your earnings divided by your outstanding shares. So you don't want to issue too many extra outstanding shares because that could hurt this category. Return on equity is your profits. The profits that your assets generate, so it's looking at profits and assets. And again, Chapter 3 will talk more about this financial ratio. And you want, for return on assets, we want definitely, at this point, above 30%. Okay, net profit margin, this is after all your costs. So, the net profit margins here range from 9% to 28%. And this is your bottom line after all your costs and expenses have been paid for. Revenues per share, look at your total revenues divided by outstanding shares. And total asset turnover looks at how your assets are in relationship to your sales. So if your sales are 3 times your assets, your TAT will be 3. So here we have 1.8, which is close to 2, so which means your sales are twice the size of your assets. And the idea here is that your assets generate a lot of sales. So you don't want to create too many assets because you want your relationship between your assets to sales. You want your assets to make as many sales as possible. So having too many assets, useless assets like inventory. So you don't want to have any excess inventory. That's an asset that just is not useful for the company. All right. Okay, so that's the leaderboard for the simulation. Now, if you look at the demo, I'm just going to open up my demo. I completed round 1. And how I would move into round 2, this is just suggestions, so what you could do before you move into round 2. Suggestion number 1 is you read this announcement or this email on how to score big on the simulation, and you follow these helpful hints and watch the review video. Number 1. Number 2, look over your overview points. So here I see in my overview points, I was able to increase my revenues per sale by 97%. I earned 97 points. So I get 1 point for every percentage increase in my sales. My quick ratio went down, but that just means that I have more debt to assets, so I lost points. And here my debt ratio went down a little bit, so that was good. I made some points there. My net profit margins, I got my profit margins up. My operating and net profit margins all increased, so I made a lot of points there. And when I increase my profit margins, that will also increase my points on total asset turnover, equity multiplier, return on assets, earnings per share, return on equity, This is return on assets. So I made points in all these categories because I got my profits up. That's why it's so critical to keep increasing your profits. My market capitalization went up, my book value went up, and I was able to forecast more accurately on my cars, so I earned points there. But next round, when I do a perfect score here, I'm not gonna really be able to make more points next round because I can't do better than perfect. So I'm trying not to lose points in round 2 here, I guess. Operational investments increased, and I made 100 points there, and I had a surplus. So that's how I got to my 1,000 points. So when I start before I start round 2, I'd go to the assessments area and I'd review my assessments and then look for the helpful hints here on how to do better on my assessments. And the assessments give me a scale of how well I did. So if I had less than 4 or 5 stars here, I'd want to look into this to get an idea of how I did in every category. So this is a real good feedback that everybody should be reviewing. I check out the charts, especially the performance charts here on the individual company. And I'd want to check out the bottom here on my market potential to actual. So here, my actual sales, yellow is actual sales, is 2,000. I could have sold 2,200, so I missed out on 200 cars that went to a competitor. I made my full sales on sedan and truck, but in luxury, I really undershot. I could have sold 1,681 luxury cars. I only sold 1,500. So just gives me an idea how my forecasting is. So that's important. Okay, so I'd go to the industry, see how my competitors are doing, look at how they set things up, try to formulate a strategy, and then review my financials, then go back into sales, and I'll notice that the expectations are higher now. I do have some operational cost reductions from my other page, so then I would start, I'm just going to throw in some random numbers here. This, do whatever you do, I would not copy me because I am not really thinking ahead here. I'm just throwing in some random numbers. And I would revisit how I'm making my cars. And I probably should keep an eye out on my profit margins to make sure that I'm able to increase my profit margins this round over last round. And if you scored very big in the first round, it's sometimes hard to beat that score in the second round because you're competing in a sense against all the other all the other players in the class, but also against yourself. You want to beat your previous year's information. Okay. So marketing takes a while, so I'm going to just skip over that. I know that here the expectations have increased, so I got to think about this. Takes some time, so I'm just going to do this offline. Okay, so I'm just make sure that I don't have to buy any production plants this round. So now I have some extra inventory here, so I'm just going to try and produce exactly what I need. So I don't want to have an excess or shortage. So when I have extra inventory, that means that I built more cars than I was able to sell, and that created this inventory, which I can resell the next year. Okay, I'm going to buy some more operational investments because this makes my company more effective and reduces costs, and also I earn points by keep investing in the company. So let me finish that. Okay, so I do have to buy a production plant. I'm glad that this simulation warns me when I make a mistake like that. Okay. Which was nice about this simulation. All right, so the last and final page is finance. So I'm going to write down here first and see, I have a nice surplus. So maybe I will use that surplus. I'll go back to production, and maybe I'll increase my operational investments a little more, spend some of that surplus, and go back to finance. And I still have a nice surplus, so maybe I'll buy back some stock, buy back some debt, reduce some debt. Okay, and then now I'd like to have a surplus greater than 10 million just in case, so I don't have a so I don't wind up having a deficit, which cost me 100 points. Okay, so that's just some ideas of how to fill out round 2. I'm not going to actually show you the results of round 2 right now, but I'll go over that in the next video, and by that time you should complete, remember you need to complete round 2 by Thursday, so this is my quick 15-minute review of the first round of the simulation and suggestions on how to do better. Okay. Remember, you can always run practice rounds, so if you want to test out some theories or work on doing better in the simulation, you can, or feel free to work in the individual practice alongside of the team competition. Okay, thank you and good luck.